Okay, so look, welcome to the Apex Trades recap for Nasdaq. Um, if you followed along with any of the last few video sessions, I've been doing a daily update on my trading strategy, how I trade, the indicators I use, and just looking at performance in a really objective sense. So I'm going to carry that on. Today, I have to say, was not the easiest of days. It wasn't straightforward. Or the execution was straightforward. However, let's say what the market opportunity gave us wasn't as good as it was yesterday. So we're going to dive in. This is live. So in the previous sessions, I've pretty much done this as a recorded session and then uploaded it after the fact. I thought to myself, let's do a live. I'm not anticipating that there was no warning. I've just done this kind of live as we are now. So probably not anticipating many to turn up, which is cool. But we'll dive in live and let's see if there is any questions. Always happy to take them. I have a trusty pint of Lowenbrau from Germany. It's in a Paulaner mug, but that's all good. So without further ado, let us dive into the charts. So let's just start off right. So first and foremost, like I always do, I have put the screen back to pre-London session. And for a quick recap on how I trade and the kind of software and the strategy that I deploy, what we're really looking for is these outer lines, right? These are standard deviations. These are third standard deviations. That's a second standard deviation. The white line in the middle is VWAP. And the red line here is the second standard deviation to the upside. And the higher standard deviation to the upside is the third standard deviation. So think of those as really stretched and a lot of tension when price gets up to them regions, right? And so what I'm essentially looking for whenever I do this is really to reverse the market at that point. Now, because of the way in which I'll use my risk management, I'm happy to take a few paper cuts, and I call them paper cuts because for me, I'm not too bothered if I get which I'm trading with a 250k account, right? And so a $200 loss in the event that I think something's going to reverse, I'm happy to take a $200 loss. And so we're going to go through today's events, see how the trade played out or the trades played out, and whether we made a positive net benefit or a negative net benefit. And so we'll play that out. We're on the 1 minute time frame. If there's any questions, feel free to drop them in and we'll answer them as we go. Just a few elements to discuss. So we've got previous day high marked here. We've got the pivot points. These three blue lines here are the center pivot top, pivot bottom, and the pivot center. We also have R1 down here, S1, and then we have what is it? 74. And we have previous day low. So yeah, I don't anticipate price going that low, but you never know. So two things that ideally I'm looking to happen. What we're seeing here is this orange line is the session of Asia's low, right? This is Asia's low. This line here at the top is Asia's high. So this usually happens while I'm asleep at the night. So when I wake up the next day, I'm looking for what Asia's done, how Asia's created that range. And then I'm going to see when Asia closes and when London takes over, that we take that session liquidity high or low, and then we reverse the market. Some things that I'm always mindful of, though, that you ought to be mindful of as well. If we start taking a session low or a session high, and there's relatively close targets nearby that can still provide more liquidity, that could be previous day low, that could be a pivot point, R1, S1 as an example, then there's always that chance that can happen. But even with that being said, I will still take the trade and see how we go. So let's kick off. We'll do 10x to get things moving along a little bit. Okay, so range is just being created. I'm waiting for 10 o'clock, which is around about here where my cursor is. That's what I'm ideally looking for to take a trade. So really, I don't want London to take, I want to see, I don't want us to come as high as that third standard deviation until after 10 o'clock, really, because that just provides a bit more liquidity for me in that sense. So let's just see. We are kind of bobbling around. Just hit the second standard deviation and we're starting to move up a little bit. Okay, so I'm just gonna move this to 3x because I can't remember exactly how this goes. Now, for super transparency, I wasn't able to trade again today. And so that means that I couldn't take this trade. I would have taken this trade, but I didn't take this trade. But I still always want to review the data. Because I was in work, I wasn't able to trade. But let's just see what happens anyway. I think it's always important to review your charts to see if your strategy played out. And I think you learn so much more by doing this than just turning up to the charts every day without any kind of, idea or plan. So just about to end Asia's session and go into London session, and we want to see, an approach up to this third standard deviation, ideally as close to it as possible. For me, my own personal standpoint is I'm happy to get into a trade in and around this second to third standard deviation. The closer to third standard deviation for me, the better. But it doesn't always happen, right? So you've got to be prepared either way. Let's move the charts on a little bit. Now approaching 10 o'clock. And what you will see is that Asia's is now finished. So Asia's session is now finished, which is represented by this orange line here. Okay. But then you see London takes over and prints the green line. So this green line is London's high. This orange line is Asia's high. So what that tells us is that both London and Asia have both got the same high, right? Equal. Because of the crossover when Asia, there's still a 2-hour crossover when Asia's still in play and London opens up at 8 a.m. And so we've got, always be mindful of that fact. There's a 2-hour crossover. What I want is for Asia to finish, which is 10 a.m. my time, and then for London to be taken out. Okay, so we're getting awfully close to that high, right? To that third standard deviation, and we've now taken Asia. So for me, I would be thinking about taking a trade now as a short. Let's give it one more candle, see if we go even higher. Okay, I'm going to take this trade, and I'm going to go short. I'm going to go one sell. I'm going to give myself a $200 stop loss, like that. And then I'm going to let the market dictate what the TP needs to look like, okay? Okay. So we're not out of the trade, but we're getting awfully close, right? If I got stopped out here, I would get straight back in again. Let's see. Got a rejection. Price is moving away. Okay. I'd at least want to cover to that structural level there, just to show it a little bit into a, we're covering our lot. If price comes back against us, at least we've got some profit. But if I see another structural low, or if I see another piece of structure being maintained, I would drop that down again. Okay, stopped out. $25. It is what it is. No harm, no foul. And it's annoying because now prices obviously started moving against us, right? Or, well, actually, no, it hasn't. It's come back in. Okay, we're just going to skip price on again. So, made a small profit, $25. It could have been more. But in all honesty, if that didn't take us out, that would have taken us out anyway, right? And I wasn't confident when price was moving down. Really what we're looking for is that we've taken that third standard deviation, we've taken Asia's liquidity, so you're expecting a bit more of a move down. So I don't think it's a bad idea to, you know, not be too drastic or not be too quick in with your TP, right? So which is why we were only there. I mean, if you're fading that quite quickly and you're trying to get your stop, okay, you might make a little bit of money, but you might get a small pullback and then a huge move down. And I didn't want to miss that. Nevertheless, price still came back and took us out, right? So we are currently just at a $25 gain for the day. You always want to give yourself more room when we're in balance for the trade to play out. Only start really getting close to fading it in terms of your TP when we start approaching that third standard deviation. Okay. So where are we up to now? Approaching, this is the New York session, of course. Now we're in balance. Never going to take a trade around these zones. Just as, oh, damn. Okay. So that hits it. That this London has hit third standard deviation, right? I'm gonna have to remove. I'm gonna have to go back because I was a little bit too fast with that. But in all honesty, third standard deviation, absolutely, we would have taken a trade there, right? So we're gonna shift ourselves back a bar. This is what I don't like about the replay tool because realistically, right, New York opens up and you're watching this play out in real time. And so we see first move in. Now I can only buy at this close of this candle, but I would have absolutely sold up here, right? I'd have put my sell there right at the top of that third standard deviation and I would have had a $200 stop. And so if I click sell, I'm giving myself a $200 risk. The reality, whatever happens now with this candle, I would have been entered up here because it's at that third standard deviation. But it is what it is, right? Let's play it out. Okay, nice move straight away. Because we're at balance, we want to play this with a little bit of room to breathe. Now remember, this is a 250k with a 6,500 drawdown. So when you're playing this, I'm not overly concerned with the drawdown and how that will be affected. Specifically, more to the point, if you get over that drawdown limit, that almost becomes a non-problem, right? But this would have been the move of the day. Absolutely. Straight in there at the top of that, right at that third standard deviation. Nice tight stop loss, $200 like we always do. And you would, that 750 now would probably be closer to $2,000. But we can't do that on the replay, right? So let's go next. Now we've got to think about, absolutely we would bring into break even, right? But we want to give it a little bit of room to breathe. We're at balance, and so we know we're going to get a bit of chopping around the around VWAP. But once we get a little bit of a break, we at least want to bring this down to this top structure level here. Okay. Want to see a nice breakdown so we can bring this down again. Right now we're kind of in that choppy area, so we wouldn't want to risk bringing it down just yet because it hasn't really given us any range. This is what I would say is a range bound move. Seeing a little bit of a move down now. Okay. Still nothing significant enough for us to move our position down just yet. We need to see a nice. Ideally, we want to see some structure being created before we move our TP down. We're still in a good position, right? We've got 410 to the green side. Now, look again. The other thing on this, we're $1,200 to the green here. Probably would have been a lot more if we'd have got in there. If you're taking this trade with one contract on NQ, you might well absolutely be fine to take that trade and say, do you know what, $3,000 or close to $3,000, you'd probably be looking at. I'm going to take that and I'm done for the day. 100%, nothing wrong with that. If we break this low, I would bring us down a little bit here now because that would show that we're making some more structure. We'll see, still hanging around VWAP, so we're not taking that off just yet. Still not give us any structure to be able to move our TP yet. Need to see it. Okay, that's now gone lower. Fantastic. So we can now, I would say we can bring it down to this move here, which is the top of that structure. That now guarantees us 790, right? But here's the thing right here. Now we're getting very close to that third standard deviation. So what we're going to do and the way we would approach this, the closer we start to get to that tension, right? Remember, elastic band, really high strung and expectation of potential reversal here, is you want to play this really sharply now, right? And so, I wouldn't have a problem with moving this right down to here at this stage, simply because we are getting close to that. But we haven't quite hit third standard deviation yet. If we hit standard deviation 3, I will absolutely bring that right down. But for now, let's just let it play out. The thing as well, just what I'm noticing, and the thing why this is not a bad idea is, we're getting a lower low here, or lower high rather, and ideally if we get another lower high, we're not structurally, we're starting to show some negative moves, which is good for us if we're in this trade, right? But the other thing you've got to be mindful of is New York has opened up. It's only really created a low. Yes, it's created this little flash high here, but you'd still anticipate the price would want to come back up again. So that's why I'm thinking this third standard deviation gives us a bit of a potential to get back in on another trade to the upside. If we create another low, I'm going to drop this down to there though, right? Okay, perfect. We're now going to bring that down to the low. Coming very close to that third standard deviation. If my TP wasn't there, it could very well be already if I wasn't just letting it fade. Now I would be bringing this very close, right? Because we're coming close to this third standard deviation. I don't want to give back profits. I may even be fading this candle by candle. I would just not want to lose profits at this stage, so I'm going to go for it. Wow, okay. So, here's what we would do, right? We've just hit that third standard deviation. We would close this, right? This is how we would play it. We're going to close this, and now we're going to jump into a long. And then we're going to go buy. We're going to give ourselves $200 stop loss. This is the exact same system that I've been showing for the past, well, it's developed over a long time, but on the YouTube channel for the past few days, no difference. No different to the way we're entering, no different to the way we're taking trades. You've just got to be flexible to market conditions, right? Okay, absolutely. We've just taken a loss there. That's fine. We're going to get back in because we're at third standard deviation. I'm going to set myself another $200 stop loss. Price has moved in our favor. I'm going to bring this to TP or break even. Now we're looking for structure to be made to the upside. Okay, let's bring this here. So now we've secured $200 profit there. Now you've got to be thinking to yourself, there's a chance that we're going to probably come and test VWAP. So, do we bring this up to here or do we leave ourselves this structure? I don't know is the answer. Personally, I'd probably just leave it here for now because we've done two things, right? We've taken Asia's low, which is here. This is Asia's low. So we've taken Asia's low. Now that's normally the fuel for a move to the upside, right? So I don't want to dive in too early and take a loss early because we're in a really strong position, right? We've got in right at that kind of third standard deviation. We had to take a few paper cuts to get there, which is absolutely fine. So I don't want to take that risk. So let's play it out. This might still be okay, right? I haven't seen anything wick that out yet, so we're still in business. Even now, we're still in business, still no problem. Okay, now we've made a high. Happy to move this up to here. And then net ourselves a guaranteed 450. Remember, this is only one contract, right? And so, you know, from a de-risking perspective, I don't think it's a bad move at all, because you're not over leveraged, you're not giving yourself, you know, crazy 4, 5, 7, 10 contracts moves. Okay, new structure. You know, now you've got to think to yourself, we've already made some decent profit from the initial session move, right? And you've always got to be mindful of the consistency rule. And so really, you know, you may not want to take this trade, but it presented itself, right. It gave us an idea that we can work to, because it ticks all our boxes. Took out Asia's low liquidity, and of course, you know, it took out London's low. These are two big areas for us that is fantastic, that we want to see. And now it's just okay. Well, let the market give us what it wants to give us. So we may get stopped out here, may continue up. If it creates higher structure again, I'm going to fade it. Okay, I'm going to bring that up to VWAP now, because don't want to lose out. Stopped out. But that's 4 trades, right? Because we took a few losses. I think there was two or three losses that we had to take. But it was 4 to 5 trades, 2 of them being the moves, right? The move initially down, which was from here. Now, that would have been a much higher move. It's just on replay mode, I can't show that because it doesn't, it wouldn't let me take that move. It would only allow me to take it at the close of that candle. And then the bottom here, right? So two zones, right? Actually, that's a lie. There was one here as well, right? So we took a trade here. We only had a few moves, but that was about $300. Then we took this trade again, tick the 2 boxes, liquidity taken and third standard deviation. And then we took this move, which was also our TP from the second trade, from down here up to VWAP. And so, you know, that's just shy of $3,000 just using one contract. It was a relatively low volume day in comparison to where we've been at. But if we just kind of move it on, let's just see if we've got anything else that gives us any ideas. But right now, this is balance. And so I'm not trading balance, right? And you've got to try to be patient. I mean, that was 2 trades in the entire day, right? 3 trades, sorry. That is probably fair to what it was. But in order for you to catch them, you've got to be vigilant. You've got to be respectful to taking your time and watching that chart and waiting for it to come about, right? And if you're not, then you're going to get caught up in all of this nonsense. You know, you're trying to get trades in and out. Trust me when I say, if you're trading within balance, balance is there just to generate liquidity. That's all it's doing. Constantly chopping the market up, chopping it down, chopping it up, chopping it down. When we trade around these exhausted areas, right, where the tension's really high and a lot of people are making mistakes because they're expecting the blowdown, yeah, or a little liquidity grab or aiming for the zone. These are the zones really where we want to be trading, because it's okay to take a few losses in order to get the move that, you know, takes us up to here. Now, in all honesty, looking at that, you know, I was originally positioned here. I then moved up to here to VWAP. You know, if I was a bit more patient, price looks like it's continued higher. Then come back down. I mean, I would have got a few more points out of it, right? But it's not a problem. It might not be a problem, but okay. It would, well, we would have got stopped out anyway, wouldn't we? Okay. Anything else? So it looks like that's probably going to be the only trades that really presented themselves for the system. Everything else, you know, you would have kind of just hopefully sat on the sidelines, but, you know, a couple of losses to net what would have been $3,000, but even more on the face of it. And that was a good day. So, but this, you know, yesterday was phenomenal. That was a $6,500, and then the day prior was $1,400. And so even on days where relatively low volume, like today was a pretty, in terms of the move, the expanded move. If I look at, just go to for the 1 hour, say, right, that's the day's move versus that. That was yesterday's move. That was today's move. Not a lot of movement at all in that chart. And so, but even on days like this, there was still a lot to be had. And if you're sharp enough to spot this, right, you can see exactly what happens. So we consolidate during Asia. We manipulate to the upside, which is to say we take liquidity to the upside, and then we manipulate to the downside before we expand back into the session range. This pattern here, we see this so often all the time. Consolidate, whip up, take the liquidity, whip down, take the previous liquidity, end up back in. These days are just there purely to generate liquidity for higher moves. So it wouldn't surprise me now if we kind of stay in this range for the next kind of few days, weeks, just while because of this big expansive move, we're at all-time highs, etc., etc. But these kind of moves where we consolidate for a session, we peak our heads above the clouds, take that liquidity, peak our heads below the clouds, take that liquidity, and then we end up back in that kind of main range again. That's this consolidation, manipulation, distribution, or accumulation. It's the three phases that you tend to see between the sessions. Asia followed into London, and then London following into New York. So 3 days, three really good sessions in terms of the Apex trade strategy. Really worked well. Just following the same standard rules. If there's, I'm live by the way. So if anyone has any questions or you want to ask me anything, drop them in the chat. If not, I'll probably end this relatively soon. Okay, I think that's pretty much it. Just wanted to kind of do the recap review session. I don't know that I'll do this live again, but I'll certainly keep doing this daily recap session. I think it has a lot of value. I think it, explaining, what we're seeing when we're at these regions and how we're trading, what levels we're looking for. I think they're really useful. So I'll keep doing them, I think, and we'll go from there. Okay, so thank you for tuning in, and I'll see you in the next one. Speak soon.